putting this together. And it's a great idea. I look forward to participating in more of these where I don't have to sit on the hot seat. But so what to me, I mean, the film tax credit is an interesting topic, but I tend to look at it as just one instance of a much larger pattern, and the life sciences credit is another, but there are when I worked for the government myself, we used to refer to as the wide array of tax incentives that every state now uses as a centerpiece of their economic development policy. And I want to sort of use the film credit as just an example. I mean, to me, not to pull any punches at the beginning, I mean, to me the film credit is kind of the reductio ad absurdum of all of these tax credit approaches for reasons that I will get into. But I'm hoping that we can sort of use a discussion of the film tax credit as a kind of a gateway to a discussion of the larger issue of use of tax policy as a tool of economic development, and to the question of how does state and local governments effectively do economic development? And my thesis is not by manipulation of tax policy. So maybe it would help to start by just filling in a little bit about the mechanics of the Massachusetts film tax credit. It's a 25% tax credit. And I think when people hear that, they think, oh, that means that the film producers are going to get a 25% reduction in their taxes. No. What it means is that every dollar that a producer spends, they get back 25 cents of it from the Commonwealth of Massachusetts. Now, film producers don't tend to have big tax liabilities. In fact, these are typically one-off production companies. They tend to have very few profits and pay very little tax at all. So what do? Well, the way that the film tax credit is structured, a production company has three options. If they say they spend $20 million making a film in Massachusetts, they've earned a $5 million tax credit. They can use it to reduce their Massachusetts income tax, but they probably don't have much of that, so that's probably not going to be much use to them. Two other options. One, they can take it and cash it in at the Department of Revenue. They show up with their $5 million tax credit, and the Commonwealth will write them a check for 90% of it, for $4.5 million. Or the other thing they can do, so that's what's called refundability. The other option is transferability. They can take that $5 million tax credit and sell it to a tax credit broker who will obviously pay them less than $5 million, but obviously more than $4.5 million, because they could get the $4.5 million from the Department of Revenue, and will then sell it in turn to some other business that actually can use it to reduce their taxes. The Department of Revenue does annual studies of the film tax credit, and their most recent study covered about $150 million of tax credits. About 100,000 of that 150 million was actually used by the producers to reduce their own taxes. Almost all of the remaining 150 million was brokered and used primarily by banks and insurance companies to reduce their own taxes. So the first thing to understand about this isn't a program to reduce the taxes of filmmakers. This is a program that takes tax dollars that would have otherwise been paid in as taxes by insurance companies and banks and high-income individuals, and transfers that money to the film producers at a massive scale. I mean, when I did go to see the town, and I asked when I bought my ticket whether I could get a 25% reduction on my ticket, since I'd already paid 25% of the cost of the movies, and they didn't know what I was talking about. The cost in Massachusetts is somewhere between $100 and $150 million a year. It's not chump change. As Dan mentioned, 45 states presently offer credits. Some are as low as 15%, some are as high as 42%. So Massachusetts is somewhere in the middle. Now, so let me talk a little bit about how I look at this when I'm trying to evaluate the film tax credit as an economic development policy tool. And I guess the first thing to say is a lot of this is generalizable and reflects the same way that I'm inclined and others are inclined to think about other pieces of tax policy used for economic development. There's one respect in which the film tax credit is quite unusual and which really skews the way one has to think about it, and that has to do with its enormous size. There's no question that the film tax credit does influence location of film production activity. If you can reduce your costs by 25%, that's going to affect where you're interested in doing business. I think it's probably true that given that 45 other states are offering these credits, if Massachusetts was not, there would be little or no activity in this industry in Massachusetts. That's quite different from the case with most other tax policy tools used for economic development, relatively few of which have these refundability and transferability features, most of which mainly are used to reduce your own tax liability. We can come back and talk about that a little bit later. So the film credit is really tax credit policy on steroids, and it means that it does have effects of a magnitude that other tax incentives or tax rewards don't have. But that doesn't answer the question. I mean, that answers the question, does it have the intended effect? That doesn't tell us whether it's a desirable policy tool. So a few questions that I'm inclined to ask. The first question, and Dan answered this a little bit, is why, if we're going to spend $150 million a year, why choose the film industry as the place to spend it? And there are a couple of odd things about the choice. First thing is, this is an incredibly footloose industry. They are, in the words of one publication, gypsies. They do their one production, they pack up and they move to the next place that they want to be, that the price is right to be. There's nothing, it's not like an automobile plant or a pharmaceutical plant that once you build it, you have a deep investment in assets on the ground and it's hard for you to leave. You come in, you make your movie, you're here for 3 months, and you're gone. And if someplace else is offering bigger credits, you're going to go there. These credits, they started, there's a long history of some support of the film industry, but mostly this began in 2002 when 2 states, Louisiana and New Mexico, got the idea of offering robust payments to the film industry. And they both attracted a lot of film activity in the first few years. Between 2002 and 2009, this spread across the country, 45 states now, and the film industry isn't nearly as prominent in Louisiana and New Mexico as it was. They have fled. The people who invested money in big sound stages in New Mexico went belly up. So if you're choosing an industry where you could make an upfront state investment and buy some long-term economic activity, this doesn't seem to be it. The next thing, I would have thought, if you were picking places to invest your resources, one of the things you try and do is be strategic and go where other people weren't going. Why pick a field that 45 other states are also choosing? And I think as we think about tax credit policy generally, that's an interesting thing to come back to and notice, this replication across the country of competition for this one small mobile industry. The story that, and I'm interested that you didn't mention this, but the story that gets told by many defenders of the film tax credit is, well, if we attract the activity, we'll then attract major permanent investment. Plymouth Rock Studio, maybe that's why we don't talk about that anymore. It didn't happen, and it turned out to be a little bit of an embarrassment before the story was over. That's at least the hope that a lot of legislators and policymakers hang their hat on. But again, the history is not attractive. Both in Canada and in the early adopter states, there were investments in the infrastructure and sound stages. And now, boy, if you could come up with some creative way to use empty sound stages, you'd have a really good business to be in, because they are going to, there's need a sequence of them around the country where they got put because there was activity because of a state's credit leapfrogging other states, and then when other states leapfrog them in turn, it turns out not to be permanent. So I'm puzzled by why you would choose the film industry as the place to invest. I guess the next thing that you want to do is a cost-benefit analysis. Department of Revenue does a really nice job of compiling what's happening. The report, I guess, is up on the website. They've got a new one coming out in a few weeks that's going to update it, and they've got much more data this time. It's going to, for data, people who love data, this is going to be a fun place to spend some time. And I'm not going to tell the whole complicated story of what their data shows, because I think most of it you can capture by a couple of very, very simple facts, right? The basic argument is this is economic development. It's providing jobs. Well, how many jobs is it providing? Let's assume, and I think this is probably a decent approximation, let's assume that every job in the film and film-related industries in Massachusetts is only here because of the credit. That's not an assumption you could make when you're analyzing life sciences credits or any other, but when you're analyzing film, given the nature of the industry, it probably is approximately true. Okay, so let's take all of those jobs, many of them are part-time, so let's take full-time equivalents and divide through the total amount of the credit. How much are we spending? Well, in the most recent year for which DOR has done the analysis, for 08, we were spending $94,000 per in-state full-time equivalent job. That's a lot. It's especially a lot when you ask the next question. What's the salary and benefits of that average full-time equivalent job? Answer, $68,000. So you and I are paying $94,000 for each job that itself pays $68,000, and jobs that there's no reason to think will be here next year unless we spend the $94,000 again. We could be using that money to hire teachers, policemen, firemen, and be getting many more people employed. Now, people say, well, but of course when you spend that money and get those jobs, then they spend their money in the Massachusetts economy and there are important ripple effects. That's obviously true, but it's just as true if you spent the money on teachers or policemen. It's just as true if you spent the money on increasing the personal exemption on the income tax and put that money back in the pockets of all the working people in the Commonwealth who would go and spend it. Now, you may say, how did that happen? It's a 25% credit. How can we be spending $94,000 for $68,000 jobs? Well, the answer is that the vast majority of the money is going to subsidize out-of-state workers. In fact, in the DOR data, 40% of the wages that were subsidized by our tax credit, 40%, went to people who not only lived out of state, but were making more than $1 million on this project. So what we're basically doing is subsidizing Denzel Washington and Ben Affleck and a bunch of other people who, sad to say, are probably not spending that money in the Massachusetts economy. They're moving on and the money is going with them. So maybe the answer is, well, what about those buzz factor effects that Dan spoke of? And there certainly are buzz factor effects. Go to a hearing up on Beacon Hill and all of the court officers are all excited. This is about the film industry and what actors might show up, and there is that. Is there any evidence that that buzz factor actually moves tourism or conventions? Well, DOR goes through the evidence in their report, and they conclude that they can't make any assumptions that there's any such impact. And they base it on empirical research that's been done. So the evidence is that if it's there, and I guess you acknowledge this, immeasurably. I would call that not something I'm too eager to count among the benefits. So I think that the trade-off for having a credit that's so big that it actually has impacts is that it's going to fail any kind of standard cost-benefit analysis. There are a couple other problems that I want to focus on. First, even assuming that the use of a tax credit made a difference and did so in a cost-effective way, is it a good thing? Well, that depends on whose perspective you look from. If you look from the perspective of the one state that's deciding should we adopt this policy, maybe the answer is yes. What if you step back and look at it from a national perspective? Is it a good idea from a national perspective to have states using their tax policy as a way to influence location of economic activity? And the first thing to observe is this is basically a zero-sum game. Now, in the film case, it may not be entirely a zero-sum game. We'll come back and think about that in a minute. But in most cases, with the automobile industry or pharmaceuticals or computer assembly, it's a zero-sum game. They're going to make them somewhere. And the question is, are they going to make them in Arizona or in Massachusetts? And all that the tax policies are doing is shuffling around where they are going to end up. Now, you may say, well, what about getting them in the United States versus in China or in Mexico? We should come back and talk about this a little bit later, but the scale of most tax credits, and again, the film incentive is an exception, but the scale of most tax credits is way too small to have a significant effect on the differences that drive choices about international investment. So basically, we've got a zero-sum game, except for one thing. It's not really a zero-sum game. What's really happening is that states are dramatically reducing their taxation of a large sector of the business community. The highly mobile portions of the business community are being taxed less and less. And in that respect, what we've really got is not a zero-sum game, but what people often refer to as a race to the bottom. States are competing to the point where they tax businesses, mobile businesses, as little as they possibly can. In fact, in the film case, they're not taxing them at all. They're paying them to come. It's the reverse of taxation. Does that matter? What difference does that make? Well, I would suggest that it makes some important differences. States, unlike the federal government, can't operate at a deficit. They have to take in what they spend. So if they're taking in less, and they are taking in dramatically less from mobile business sector, what are they doing? They're doing one of two things. Either they're taxing everybody else more, or they're providing less in services. That's concerning if all we're achieving, again, from a national perspective, is a zero-sum game of jobs. I guess the last point to make in thinking about whether these are sound policy is questions about economic distortion. And the first point to make is, obviously, if these credits, and this is true of any credits, film credits or otherwise, if they're having an effect, by definition, they are creating inefficiencies. By definition, if they have an effect, they are getting a business to engage in its activity somewhere other than where they otherwise would have chosen to be, other than where it would have been most economically efficient, absent the tax credit, for them to be. The stories about the film industry, there are lots of examples of this, of films being made in settings that really are quite inappropriate to them, and having to construct and use computer-generated stuff to create snow because they chose to film in New Mexico where there wasn't any snow, but the credit was big enough to justify them bringing in the special effects people and creating electronic snow. In Michigan, they're now building replicas of the New York subway kiosks because it's more attractive to get a 42% credit to make your film in Detroit than to only get a 35% credit to make it in New York, and that justifies your replicating pieces of New York on back lots in Detroit. Is this a good investment of anybody's resources, public resources, private resources? Not clear that it is. I think the bigger problem of economic distortion is that what we're doing is we're saying some sectors of industry are going to be taxed at lower, or in the case of the film industry, at radically negative rates. And what does that do? Well, it makes those investments, it increases the after-tax return on those investments quite dramatically. I assume, and I don't have the evidence for this, but it has got to be the case that when you're offering 25, 30, 40% credits for film production, that lots of films are getting made that otherwise wouldn't be made at all. Films where if you didn't have the tax credit, you run the numbers and you say, I don't think it's justified to invest $20 million in making this film. I don't think we'll make our money back. What if you only have to invest $15 million for the $20 million film because the state of Massachusetts is going to pick up 25% of your costs? Obviously, you're going to have more money invested in film production than economically makes sense. Now, again, maybe we are enough into bread and circuses and think that's sort of the way the world should be, that we want to reward filmmaking, even if it means that we're making a lot of films that aren't real, that there isn't sufficient consumer demand for. But it's at least something we should worry a little bit about. Well, okay, so there are all these problems with the film credit. Why the continuing popularity of these in Massachusetts, around the country? Why is everyone doing it? And Barry sort of anticipated this with his comments at the very beginning. But let me just quickly run through what I think are a couple of the explanations. First, there is something of the prisoner's dilemma. But the prisoner's dilemma can't really explain why people would do things that weren't cost-benefit justified, right? There's an easy way out of the prisoner's dilemma at that point. You say, let them all waste their money, I'm not going to waste mine, and I come out ahead. So that doesn't seem like a compelling explanation in this case. I think there's some other things going on. One, I think, is just the tendency toward imitation. That state policymakers look and they see what other states are doing, and they say, if they're doing it, we ought to be doing it too. And when you watch, and this is true not just for the film credit, but for other credits, if you sort of look at the dispersion of them across the country, they start in a few pockets and they spread to nearby states, then they rapidly spread elsewhere. It's clear that the mere fact of imitation explains at least as much as good analysis would explain. The second thing I think that you've got to take into account is capture. Policymakers are influenced by those who can reach them, who pay some of their campaign expenses, who can make compelling cases in the media about their importance. The film industry is very good at all of that. And I think there's a real, and I think this is true of credits generally, we have to really worry about the extent to which the policymakers have become captives of the people who are receiving the economic benefits. And I guess the last one is just the sheer political calculus that one makes. Part of it is, we got to do something. I'm better off voting for a tax credit and then saying I did everything I could to bring jobs in, maybe get invited onto the film set, maybe get invited to the ribbon cutting at the pharmaceutical plant. And if the pharmaceutical plant we were wooing doesn't come here, I can at least say, well, I supported the policies that made us able to compete. Whereas you vote against the things, you don't get invited to the ribbon cuttings, and you get blamed if the industry goes elsewhere. So from a political point of view, it's a much easier vote. And Barry mentioned this as well, you have very concentrated benefits from these programs. people who know very well how much benefit they're deriving, and the costs are incredibly diffuse. The costs are spread out over all the other people who are paying the taxes. They're spread out over teachers and policemen who lose their jobs, but they don't know they're losing their jobs because of the film tax credit. So when you have concentrated beneficiaries and diffuse burden bearers, it makes the politics difficult. Can I take a minute to talk about the bigger picture, or should we move on to?
Why don't we
move on
and come back to the bigger
Yeah,
picture?
let me just say, if I were going to talk about the bigger picture, the main thing I would talk about is the fact that most of these other credits, investment tax credits, jobs credits, really have been shown by lots of empirical evidence not to make a difference. And the analysis then becomes even worse.